All right, so we're off to a good start. I'm gonna start on the 4 hour chart. Reason why I'm starting on the 4 hour chart, we need to understand the overall structure or order flow of the market. That is the first and the most important thing. So the selling actually started from way back in December. Well, this current sell-off that we see. But if we were to take a step further, it would be from the market price made the high in the early part of the month of December last year, that historical high. But me just can focus around this region for now. All right. So we have two very important zones that the market price is currently fighting in around. All right. And one of these zones is gonna be breached. One zone already made a historical move already and resulted in the current sell-off that we're seeing. The next one now having a warm time. Now, if you notice, I've quickly boxed in the structure of what we're in. So, typically speaking, market price is going to be bouncing around this area till it breaks off, right? Now, the reason why gold increases in value, remember, gold is a hedge against the United States dollar. So now for the dollar is not in a favorable position, and this is basic fundamentals. The price of gold is going to rise. All right. Whenever the dollar is in a favorable position, people are going to sell gold and buy up the dollar. The reason for this is oil and gold are counted in the United States dollar. All right. And America is the largest gold reserve in the world. So them have a look monopoly upon it, so to speak. All right, get these out of the way. So let's get into the technical first. Current market price 235.44. The lowest year the asset price made for 2024 was on the 17th of January, and that area has not been breached. And at the same time, we also made mention of the selling that started earnestly around back in December 28th. But we're going to be focusing on just the month of January for this analysis right now. So we're going to look for the highest year market price made. As you can see, that was made earlier in last week, Thursday. Okay. Now, what's happening right now? We're arranging, right? So the chances of market price taking out the very next day or taking out 50% of a move is highly likely. Because we're trapped at a premium and a premium era, discount era, and in the middle would be the equilibrium. That's why in the middle section prices get like a choppy in movement. That's the first thing we see. Now, the order flow is still bearish. Oops. Why didn't I change that back, bro? Let me fix this up. Line graph should be black. Yeah, the order flow of this is still bearish. That is why whenever you see, look how news come through that puts the dollar in a strong standing, you see the sell off them so sharp. That's the asset price just correcting. Because remember, most top investors looking for a discount on gold. Now let's get to the heart of this now. So right here, how the price retreated. That's the highest year for 2024. The asset price made for the month of January, 2065.42. All right. And this is where we're at currently. Now, what are we going to do? We have to incorporate data from the previous week with the current week data, and we're going to understand something called cause and effect. All right? Most people just drop a bunch of random lines on a chart. I used to do that back in the past. I no longer do that anymore. I have to see why my asset price is behaving like this. That way I can make a better decision as to whether or not I'm going to sell or buy. So the fifth, Monday, gave us both the lowest and technically the highest era, right? Let's find out. Remember, the market resets at 12 noon. So everything behind 7, which is 12, when I do the conversion, is still Sunday. So it's right here. So for us on the Western Hemisphere, that Monday officially start. So we stand corrected now, or should I say I stand corrected. This is the highest year market price made for Monday. The 5th, everything behind me is the 4th. Okay, that would have been Sunday. So Monday has given us the lowest era. Tuesday has now given us the highest era of price right so far. First key thing that we should have noticed earlier going into Tuesday was the fact that market price, although it sold, and a couple of members in the group made some profit on the sell-off, myself included, we didn't see market price continue to sell. One of the key things I want to go through in my analysis sessions with you guys is how the market price actually hints to us that it's no longer moving in a specific direction. But the problem is we're so caught up in trying to force the market, we end up paying the price. If we understood just how effective the turning points, or should I say the target areas in Forex are, we would operate better. So what are target areas in Forex? Quite simple. Target areas in Forex are where the price is going to go to complete the transaction or move, then make a change in direction or a change in characteristics. Now, change in direction means as the price was once bearish, then it gone bullish. Now, changing characteristics, it could start off trending, then it goes to ranging, and then it goes to consolidation. We're going to cover each of that later on. So, earlier, we saw from the sell-off that took place, and by the way, Monday started off the week pretty good, pretty decent. We saw from the sell-off that took place, so the asset price continue going down and reach a targeted low. And then we saw price give us the atypical first wave up. Wipe out the first wave of investors. Came down. Okay. Guess we're gonna clear that dry, you know. Came down, respected the low. So this was one of the first hints to many investors who are paying attention to the process of how to look for an entry, that this would have been a buy confirmation right here. You're probably saying, how come? Upon coming back down, the market price made what we would call a second wave because the initial push-up was the first wave. So on the second wave down, we got what we call a justification right around here. All right? Why the term justification? For those who were speculating if the asset price was truly going to go up, by the asset price pitching a higher low right here, so while respecting this floor, it gave a justifiable reason to enter the trade. So most persons would have entered roughly, I'm going to mark it with an arrow, on this candlestick right around here, or some of the caught it look late. Majority traders would have their stop loss right at the low, those who are managing their risk. All right? Pretty straightforward stuff. So price then went and took off. Now, for those who sadly went and chased the market, especially in the latter part of the day, they got trapped, right? But we already understands that the transaction has to continue. So even though the market price for the day came to an end, the trading activity came to an end on the 5th, intraday traders kept on holding, and we saw the transaction played out. Now, for those saying, what was the confirmation? Well, one thing I love about Forex is that many people don't realize that there are hints, even on the very first candle, to support whether our market price can go up or down. Now, I'm going to share a quick little move with you guys that, kind of helps me cheat certain things. Sometimes it works in my favor, other times market price do its own thing. But anyway, I take it, it works. So here we go. It's the principle surrounding the very first candle that the market price comes through with. I usually do it just to the Sydney part of the market. So as it come on now to the opening of the Tokyo market, I don't go any further with it. But I mark what is called the initial injection of capital that kickstart everything. So everything from this first candle vantage point, and I kind of take a look at where price stops and makes a turn. So to put this in more better perspective, let's go on the M1 chart right now. Okay. So right around here, this is the first 5-minute candlestick represented with a high and a low. Now, many people don't trade the Sydney session, they don't even look at it. But here's the clue that something was coming. So asset price, as you can see, went down and stopped here, right? At that moment, that would still have been the lowest era for what day? The 6th of February or the 5th? Still the 5th. Because remember, for us who is on the Western Hemisphere, we have to know when the market resets and when in this case, the 6th would have officially started. So the 6th of February never started for us once we do the correct price time conversion until 12 noon. And as I mentioned to you guys, that is represented by what? 7, right? So I just says 12. Sorry, what did I say? 12 noon, 12 a.m., midnight. So it's right around here that market price resets, and this is where the 6th of February officially starts. So all of this is still for us on the Western Hemisphere, the 5th. However, for those who are in Japan, Sydney, Australia, Asia Pacific, it's daytime trading for them, while it is night for us. Okay. So point A, look at the move you could have caught and the confirmation from that. As soon as Tokyo session comes on the scene, market price would have been a decent buy-off that could have potentially bag you a decent 48 pips, right? Now, here's the justification right here. Cool. Now, Tokyo session started. And remember, we look for the first hour or the first hour reacts. And based on how the first hour react, we get an understanding of what the market price is going to do. So let's sketch 1 hour after Tokyo session start. Now, beautiful buy off. So 1 hour after, right around here, the Tokyo session gave us a high, 2028, and so on. Now, everything, or should I say every session in Forex, at some point, gonna pitch a high, gonna pitch a low. Our job is to time this. Now, timing is good, but we need a little bit more clues, right? So we need a visual representation to hint to us that yes, the market price truly is making a change in direction. Now let's backtrack a little bit. Let's say that upon the price going up right around here, I had sold, just for talking sake, I had drawn a line here, and I sold here, right? And price was going in my favor truly. But then, this would have been my roof. Let's put R. And this would have been my initial structural floor, ISF. The issue with this is that the big bullish candle that came through should not have broken my roof. And furthermore, print, more candles above it. Not only would I have been stopped out if I never or upon collect, if I kept on selling at this point, I'll be doing myself a disservice because clearly the market price is showing me that the bulls are still carrying the trend further upwards, right? So this was just a short-term sell. My sell-off, which I was hoping to see this happen, immediately became invalid because I should have seen price upon pulling back, fail to take out my roof. I should have seen some lower high and a resumption of sell-off to take out my initial structural floor. So I didn't see that criteria. So that's what I said. I have to see a visual setup that supports this. Something to that liking. Now flash forward to right here. Not only did the market price make this high right here, so we saw an initial structural sell-off, low, price pullback, and this is where things would have gotten interesting for anybody who's looking to sell. The market price went and triggered a lower high right here. So pencil LH. Then price came and slightly took out that zone. We didn't see a continued break. So right now we're saying to ourselves, is there enough momentum to continue to send the price further down? That ain't happening right now. So look what happened. Sometimes the market price have to do 3 or even 4 initial pullbacks before it gets a steam train and rolling. And I know you guys have seen this for yourself. So it's not all the time it makes a strong, fast drop. But these are things that we study and look for. And the M1 chart is a time frame that is going to show you it the cleanest. Now, everything comes with practice. It took me a while, but trust me, after I saw the results, I couldn't look back after that. And you can see it via the screenshots I'm posting in the group. So look here. Mute. So price came down. Now price came back up again. Now this is a psychological part now. Upon seeing this, let's say you had sold right here, so. right? Let's do some discussion. That way I can think about this when that session I come to an end. Let's say you had sold here and you put your stop loss here. And wow, you make some profit now, but all of a sudden the selling stop. Then I see bull candles are form. If you're not trusting the process, or let's say your psychology is not 100%, and if you are fret upon the loss now, you haven't accepted what your loss can potentially be. Upon seeing this, you could more than likely prematurely exit what would have been a decent entry. And worst case scenario, probably I'll change your mind from selling to buying. When clearly the roof is still intact. There are certain moves in Forex, especially retracements and pullback, that have a psychological effect on the trader. To test who is thinking like a smart money trader versus those who are still relying on retail knowledge. Yes, it pull back. That means all of this beautiful profit get wiped out if you never collect. But look what happened. For those who really they on point with their analysis, would have quickly realized market price now, still upon pulling back, didn't even take out the the second leg right here, so roof. Now, price now went looking further down this time. So most people sadly bought right as paid the price. Remember, this is where price was once at, and we're seeing bulls failing to go higher. So somebody losing gas, right? Somebody run out of steam. Now, I caught it right around here. Yeah, yeah, I look back on the screenshot in I group, but upon this leg, I caught it. I quite remember the price. Once I saw this, there was nothing left for me to say buy. I was like, nah, this is the asset price clearly showing me that it's heading down. There's no way I can see a structure that goes like this. And I start to fight the move. I can't. This is just trendline basics. But even if I never incorporate the use of a trendline at that time, the fact that each structure was showing me like a dip in the ladder, I was like, nah. Now look what happened. I would have drawn across this floor, then confirmation, breaker structure. Now, look at these two strong candlesticks. Now, this cause I look a bit of imbalance. You know why? The speed at which this move to break this structure. Many traders not only miss this opportunity, but many traders also sold at the bottom. So this is not only a look at stop out zone, it also causes a look at inequality in the market. So this is a wonderful pullback era. We're going to discuss this even more. So we got it via the retracement. Price stayed below. Price kept on going, kept on selling. And we got what would we call a break of the low that would have been made from the first hour. Forgive me for not pulling across this line earlier. Forgive me. This is the first initial low the Tokyo session would have made. Now look what happened when price touched back that low. We went right to the initial discount made at the start of the Tokyo session. Price pulled back, went up into the inequality zone. Now remember what I said earlier about the market price making a change of direction or a change of characteristics right here. So we saw earlier market price making nice wavy downward moves, right? Take a look at the characteristics right here. So now all of a sudden market price gone into a consolidation. So the thought process of many traders at this point is now, wow, market price is now dead, momentum dead, volume dead. On the contrary, this is a wonderful time in the market because the banks are now getting involved again, and they're going to either continue this trend or offset this trend. So capital was placed inside, and yes, we got a confirmation. What we got, we saw a break out of this zone. Now look at this. Perfect, equal breaks. Lower, lower. Forgive my drawings. Price then took out the initial low of the Asian session. And we're seeing it continuing. I'm not going to go all the way to US, but it's pretty straightforward. Look at the process. Now, as time went by, obviously, the trend can reach its target area. This is what I'm trying to establish. Everything in Forex for every session has a target area. Tokyo has one, Sydney has one, London has one. It's just one of them Either establish a high or low. So each data important. Each session gives you the building block. Take a look now at one market price made. The first initial push up came back down, sideways move. At this point, while many traders would have been undoubtedly stopped out in this area, many of the smart money traders have already collected their money and they are done for the night. Yeah, especially those who would have been late. This alone could have paid them. That drop from that breaker structure was a decent, let me go all the way with it, 23 pips right there. So one more characteristics change. Now, some of these consolidations, they can last for a short period. Other times they can last longer. What I tend to notice is that the longer they last, the stronger the move going to be once price breaks out of that consolidation. So take a look now, and we're going to wrap it up right around here. So this is where the 6th of February officially started for us on the Western Hemisphere. Notice all for those from earlier Tokyo who didn't collect their money, how they're being wiped out now. So exchange in power, price was going down, now it's going back up. Oh, I have to tackle right here. So for many people, I know if you spot the subtle changes. So perspective low, interference, but after a while, one direction. Look, always look for the ear that is being respected. That's the biggest clue. The side that I show you say I am choosing a direction. So it was right around here, so towards the bull side, and we got this. Cool. The lower highs, there was a breaker structure from right around here. Cool. They're all drawing. So price then went and say goodbye to all of the money you made during Tokyo session. All of Tokyo session has now been wiped out. And here's the frightening part about it. Well, the sell from the Tokyo session has been wiped out. The frightening part about all of this is London hasn't even started yet. So Tokyo session started off bearish. And then before London session comes on the scene, it went bullish. So you can't be a greedy trader. Once you see the money, collect your money. Because the very same session that you're currently trading in can wipe you out later on. All right? So I think this is good enough to kickstart us for this week. All right? We'll stop it right there. Cool. Peace. And looking forward to the screenshots and I'll post in our group. God bless.